Okay, well, let's get started now. Welcome to College Financial Plan Week. This is the first year we're doing this, and it's such an important topic. So thanks for being here. You are in for a treat today because we have Jade and Lauren who are facilitating today's workshop, and they are both IRS certified tax preparers through the Volunteer Income Tax Assistance Program. So we're super excited. There'll be a few interactive components today, but feel free to just absorb the info. And then for those of you attending who've attended yesterday, welcome back. And then make sure to sign in. And then if this is your second, you will get a prize from us for attending at least 2 of our events this week. Or if this is your first event you're attending for College Financial Plan Week, welcome. Make sure you sign in. And then we have one more event for this week on Thursday, which is Credit 101, and we would love to see you there. And if you attend too, you'll also get a free gift. But yeah, this is a Taxes 101 workshop. Make sure you sign in. Taxes are such a vital and often left out piece of building a college financial plan. And as you'll learn, there are many even tax credits that you can get as a student. So hopefully you find this helpful today. And without further ado, I will introduce our facilitators. So Lauren Berenson is a senior studying financial planning and counseling and an accredited financial counselor candidate. She has been with the Financial Wellness Center for over a year, and she is currently serving as a peer well-being ambassador. Last spring, she was a tax preparer for both stateside and international students with Arvida Clinic. She loves meeting with students, talking about budgeting, debt, investing, and financial goals. And then our other facilitator, Jade Ramirez Barraza, she's originally from Las Vegas, Nevada, and here at the U studies economics with minors in computer science and linguistics. She's prepared taxes for the last 3 seasons, and last year she was the student supervisor for our Arvida Tax Clinic. She's also one of our peer mentors, so feel free to book with her for tax support and beyond.
Okay, Elsa, thank you so much for that introduction. I'm super excited to be here today and talk with you guys a little bit about how to prepare your taxes or just some general tax education if you're not totally sure what's going on. So a few things I want to emphasize before we get started is that this workshop is intended for both stateside students and international students. We'll cover a little bit about the filing process for both and how they differ and what you can expect if you're an international student filing taxes in the US for the first time. So by the end of today's workshop, it should run for about 30-45 minutes. We want to talk about how taxes work in the United States. So that's what is a tax, why am I paying it, how do I pay it, and how do I file them? And then also where to get help with tax filing and what that can look like in the different ways that that can go for our students. So today we're going to have a few different interactive components that we're going to work on together. And as always, if you find something to be a little bit too confusing, or if you're just not sure by the end of the workshop what you want to do, you can always reach out to us for personalized one-on-one tax help at our Financial Wellness Center. So, the next thing that we want to cover are what are taxes? So this is a really great question and one that I've definitely found myself asking when I got my first paycheck and it maybe wasn't as big as I thought it was going to be. But that's because taxes are mandatory payments to local, state, and federal government. So whenever you get paid, that's something that comes out of your check. So what do we pay them for? So taxes typically fund public works. And these public works are things like roads, national parks, schools. They also fund the military. Pretty much every public service that we have in the US is funded by taxes. Another thing this includes, there's a special type of tax that you pay. These are called FICA taxes, and these fund Social Security and Medicare. Everybody is going to pay taxes in some way, shape, or form. If you've ever purchased something, you have paid sales tax. If you work in the US, you're paying income tax. If you own property in the US, you're paying property tax. Um, Income taxes are what we're going to focus on today. It's just one type of tax, but this is typically what we see people filing their taxes for. You won't have to file taxes for sales tax or anything like that. If you worked at all in the US, you'll be paying income tax. So the next thing that we want to talk about are the filing requirements for international students. So for international students, if you worked in the US at all, you will have to file taxes on your 1040 NR, which is the 1040 NR stands for non-resident. So then even if you didn't work, even if you made no income, you still have to file the form 8843. This form is kind of non-specific. It focuses maybe on why you're in the US, like what type of visa you're on, how many days have you been in the US, and this is just a form that for some reason the IRS likes to have, and if you're an international student, you'll need to file that. So if you don't file your taxes, what happens? So if you made income in the US and you owe taxes, which is the case for a lot of students, you could face penalties for not filing, or you could face penalties for non-payment. Those penalties, if you do end up facing a penalty, that's something that we can also help you with. If you are an international student on campus, there are lots of resources that we would be happy to connect you with, and we'd be happy to provide some tax counseling services there. So if this process looks like it might be a little bit intimidating, you can always book with us. And our filing clinic that we host in tax season, January through April, we do file taxes for international students. And probably my biggest recommendation for that is to sign up early. Last year we had a pretty long wait list, and we're hoping to help as many students as possible this year. So to kind of guarantee your spot, I would sign up a little bit early. As for the type of form that you need to file, if you've been in the US for less than 5 years, I would say you're typically on that 1040 NR. If you have been in the US for more than 5 years, which sometimes we see with students that came to the US for high school, if you spent high school in the US and then moved on to college in the US, you could file as a resident. And why is that important? So different countries have different tax treaties, basically. And what is a tax treaty? A tax treaty is an agreement made between the US government and the government of the country that you're from. And this allows us to exclude a certain amount of income from what you've made from taxes. So if you are from a country that has a $5,000 tax treaty and you made $6,000 this year, that means that you will only need to pay income on pay taxes, sorry, on $1,000 of your income. A really popular one, if you're a student from India, India in the US have an agreement that allows for Indian students that are earning income here to take the standard deduction. And so the standard deduction is a kind of baseline that all US residents can deduct, but students from India are also able to take the deduction. This year it's 15,750. So if you made less than that, that means that you probably will not have to owe any money to the government this year. If you're curious about what the tax treaty is for your country, you can always check the IRS form 4011. And it will have a pretty complete list of all the tax treaties in there. So what if you don't see your country? That means that there's currently not a tax treaty. And the other thing you're going to want to do if you're looking in that publication is make sure that you're under the list for your visa. Sometimes there are different tax treaties for people on an F1 visa versus a J1 visa. So you just want to make sure that you have the right idea of what your tax treaty is or isn't. There are some resources that ISSS can provide as well if you're an international student. One of their most popular things that they refer international students to is Sprintax. Instead of other filing softwares, because not all filing softwares are built to accommodate international students, A lot of the tax softwares that you see like advertised, you'll be able to fill out a 1040, but not a 1040 NR, which is what international students need to fill out. So, moving on. Okay. So this is the income and wages section, and this kind of explains the different forms that you might get from your employer. So most employees who are working for a company, they're going to receive a W-2. And a W-2 is a form that has all of the income that you made for the year, and it will also show you in 4 separate boxes the taxes that you've paid. So there will be a box for state, a box for federal. Um, if you worked over the summer in California, if you worked in Los Angeles, there will also be a local tax, or a city tax. And then you'll also see Social Security and Medicare, which these are called FICA taxes being withheld. Um, if your employer provides you with benefits like an HSA account, 401k or 403b, if you paid out some PTO, it will also be reflected on your W-2. So you can kind of think of your W-2 as your cash flow from your employer for the year. So another important thing to point out, if you're an international student and you look at your W-2 and you notice that you have paid Social Security and Medicare, if you have paid FICA tax, you're gonna want to contact your HR representative because if you're filing the 1040 NR, you should not be paying Social Security and Medicare since those are services that you as an international student will not receive. So those taxes are meant to only be paid by residents. So if you see that on there, that's a problem we have kind of frequently is improper withholding, especially it seems to happen in large employers, like if you work for the university. So just double check that you're not having Social Security and Medicare taxes withheld. The easiest way to prevent that from happening to you is to fill out Glacier. Um, this is the software and forms that you get from the U that you should be able to fill out before you come to the US. But in case you haven't filled it out yet, fill it out as soon as you can to make sure that you're not having money withheld from your paycheck that could otherwise be in your pocket. The other type of form that we often see students bring to us are 1099 NECs. And the 1099 NEC is the same form that you'll use for contract work. So you can kind of think of some examples like DoorDash or Uber Eats, or if you work for a contractor who contracts you out to do a specific service. This is really common in things like if you paint, if you do carpentry, if you do construction work, babysitting and nannying are other popular ones, or if you work for like a family business, often those will come out as 1099 NEC forms. The other thing that you'll want to look out for is if you're self-employed. Typically you'll pay taxes with your 1099 NEC. So these are also freelancers and you'll have to pay your own taxes. So the self-employment tax, these forms do not usually have withholdings on them. So when you have a W-2, when you work for a corporation or a large company, they've taken your information when you filled out your W-4 and they've decided how much they want to withhold from your paycheck in order for you to pay taxes. When you are working self-employed or for a contractor, typically that calculation doesn't happen and nothing is being withheld from your paycheck. So a lot of the time we'll see some big tax season surprises with 1099 NECs. So you want to make sure that if you know that you're self-employed, you're going to want to budget and put a certain amount of money away in order to pay your taxes when the time comes. Now, if you think that you're going to owe the IRS more than $1,000 in tax, you're going to want to start doing quarterly payments. Because once tax season comes and you file your taxes, if you owe the IRS over $1,000, this can result in a penalty. It doesn't always, but a lot of the time it does. So that's essentially because the IRS is upset that through the year you were not paying your taxes. So it's basically underpayment is what the penalty is for. Um, So that's one way that you can kind of protect yourself from receiving penalties from the IRS is by kind of getting ready to pay your taxes in advance throughout the year. So for this next section, I am going to discuss scholarships and taxes. So when you get a scholarship from the university, this is particularly pertaining to international students, but also I've seen it apply to stateside students a lot. So when you get a scholarship, the money is not always tax-free, which can be really scary. We've had students come in that had these massive scholarships, which is so amazing for them, but they didn't know that they had to pay taxes on 30, 40, $50,000 worth of scholarship income. And obviously that can be a pretty huge shock if you were intending to spend all of that money on your schooling. So your scholarship up to the amount of tuition that you pay is tax-free. So if I'm meant to pay $10,000 in tuition, but I got a $15,000 scholarship, that last $5,000 is going to be taxable. Another thing that is sometimes confusing for students, if you have a scholarship that covers your room and board, that money is taxable. Any scholarship money that is not going directly towards a tuition payment is taxable. So, how would you know where to find this information? So, on your CIS, you can find your 1098-T. This is a tuition statement which says that you paid this amount of money. It will say if you paid it out of pocket or with a scholarship, it'll all be on there. And another thing we use 1098-T for is for the American Opportunity Tax Credit. So even if you don't have a scholarship and you think this doesn't apply to you, you're still going to want to know where to find your 1098-T so that you can qualify for that tax credit. It's a really, really great one with like a large refundable portion, which it's not super common, especially not as you progress in your career and have to pay more taxes. So while you've got this 4 years to kind of use the American Opportunity Tax Credit, I really recommend that. The 1042-S for non-residents. This is the scholarship form for people who are from different countries. An important note about the 1042-S, it doesn't come out until March. So if you know that you had a scholarship this year, your 1042-S will not come until March, and you should not file your taxes until you have your 1042-S. So if you know that you've got a scholarship, just wait till March, and then, or if you want to schedule with VITA, just know ahead of time that your 1042-S won't be coming till later and schedule an appointment for later in the tax season. So what if you don't have a 1098-T? That is not unusual. It happens when you have more scholarship money than you paid in tuition. So then you won't get one because the 1098-T is meant to document the amount that you paid out of pocket. So if you've got a smaller scholarship that doesn't cover tuition, if you got a scholarship for like 2,500 or so, you'll still get a 1098-T. If you got a full ride, for example, you probably won't receive a 1098-T. So moving on. That's my son. I think, yes, we are gonna start now with our second panelist, Jade Ramirez Barraza. She's fantastic. And yeah, without any further ado, she's gonna talk to us about today.
Oh, hello everyone. So I'm Jade. I'm gonna get started on talking about deductions. So the important thing to know about deductions is that they reduce taxable income. So your taxes are calculated by kind of like a certain percentage. We'll talk about it later. But that percentage, like the number which that percentage is taken off of, is your taxable income. So this is gonna reduce your taxable income, not your taxes. So there's two kind of deductions that you can take. Usually you take either the standard deduction or itemized deduction. Most students that we see are going to take the standard deduction, usually itemized or for people who are in a different life stage that have these type of itemized expenses. So we'll go over standard deduction first. It depends on kind of like your filing status. So if you're single or married filing separately, it's going to be around 15,000. If you're head of household, so usually that's if you're single and you have children, that's about 23,000. And then the interesting one is for dependents. So if you're dependent, it's either the greater of 1,300 or your income plus 45. $450. So what you decide to file really just depends on your situation. Usually for students, they have to make a decision between filing as dependent or single. So the legal definition is that you are a dependent if more than 50% of your support comes from your parents or from someone else. You're dependent on that person. Um, but we sometimes see people having to file as single or independent just because they want to get residency and stuff like that. So it really just depends on your situation. There are like implications on the tax credits too. So we'll talk a little bit about credits, but like there are certain credits that you can or can't get if you're a dependent. And then next we'll talk about itemized deductions. So you won't see this usually until people are later in their lives, because usually this is like certain expenses that you've had throughout the year that you can take off your taxes. So mortgage interest, charitable contributions, medical and dental expenses, and state taxes. So here, especially in Utah, usually we'll see a lot of people who are like higher up members of the LDS church file itemized because they pay so much in tithings. So they get those charitable contributions written off. For international students, they usually cannot take the standard deduction, and usually we'll see them itemized, but not all of these itemized expenses apply to them. I think right now it's usually just charitable contributions and state taxes. So if you're paying anything in state taxes, we can itemize that off. And if you pay to a charity, like for instance, a big one is church, as long as it's a US based church or organization, we can write that off. Another thing that we kind of put a little blurb here on is adjustments to income. So these are just like simple like adjustments that we can make to like reduce your taxable income. So student loan interest. So once you graduate, if you have a student loan, or even now actually, if you're having some of that interest accumulating and you're paying it off, we can add that to your taxes. Traditional retirement contributions. So if you make an appointment with us to talk about retirement, we'll talk about the different retirement accounts. But one of those retirement accounts, everything you contribute gets right off your income. So if you made 20,000 and you decide for some reason to invest $5,000, we can actually just write that off your income. And you won't pay the taxes on it till later. We can make an appointment and talk about it more if you'd like. But everyone qualifies for these adjustments to income. Okay, go to the next slide. Okay, so this is credit. So like I said earlier, adjustments reduce how much taxable income you have. This reduces the taxes that you owe. So it will count directly against what you owe in taxes. Two common ones for student are the American Opportunity Tax Credit. This is the one that we see a lot, and unfortunately we see a lot of people like not filing it either. So for this one, we'll have to use your 1098-T. And basically anything that you paid in tuition is showed on that 1098-T. So whatever you paid out of pocket for tuition, this includes loans. So if you used a loan to pay for your tuition, you could still get this credit. However, if you had like a full ride or like scholarships covered most of your tuition, you probably wouldn't get this credit. But yeah, if you paid any tuition out of pocket, you can get money for that. And it's about up to 2,500. I think to max it out, you have to pay around $4,000 in tuition. So if you paid, like, let's say you paid $60,000 in tuition or something, high like that, you wouldn't be getting more than someone who paid, $4,000 or $6,000. So yeah, I wouldn't say go out of your way to pay more tuition just to get this tax credit. But yeah, this one, if you're a dependent, you wouldn't qualify for this tax credit. Instead, your parents would get it. So that's another important thing to discuss with your parents when it comes to figuring out if you're dependent or not. The other kind of education credit is the lifetime learning credit. So this one's up to $2,000, and it's similar where it's like what you pay in tuition. If you pay anything in tuition, you kind of get money back for that one. But I think for this one to max it out, you have to pay about $10,000. The kind of key difference between American Opportunity Tax Credit and Lifetime Learning Credit is that the American Opportunity Tax Credit is for the first 4 years of your education. So usually this is undergrad, and then Lifetime Learning is anything after that. So usually this is graduate students. There are other tax credits, and if you're interested, we can make an appointment to talk over them. But like other important ones include like earned income tax credit, which is if you make below a certain amount of money. And then if you have children, it goes up and up and up. Another one is the child tax credit. So there's different credits related to having children, but usually they pay off pretty big compared to these. And then I think we can go to the next one. So yeah, we'll talk about a little bit about how your taxes are calculated. So the US uses a progressive tax system. From country to country, if you're from a different country, you might notice this is a little bit different. Some countries like to do a flat tax rate where they're like, oh, everything is going to be taxed at 5%. The US does it a little differently where each portion of your income is taxed differently. So the higher your income, the higher the tax bracket. So what this means is like, let's say you make, let's say $15,000. After the standard deduction, that's zero, so you don't owe anything, and taxes will go up a little bit higher. Let's say you make $20,000. After the standard deduction, it will be about 5,000. So if we look here, from the first zero up to the next $11,000, you pay about 10%. So if we go up a little bit higher, and then let's say you made like $40,000, so we have that 5,000 that's taxed at 10%. And then it goes up to like, oh, it goes up to 11. So I think, oh my gosh, I'm getting myself confused. Okay, so it goes up to 11,000. So let's do the math. You have 40,000 minus 15,000. So that's about, let me double check it. 40,000 minus 15,000. So that's about 25,000. That's taxable income. Then we subtract the first 11,000, which is going to be taxed at 10%. So that means you have 14,000, which is next going to be taxed at the 12%. So yeah, it can be a little bit complicated, but it's just like each part of your income is going to be taxed at a higher bracket. So that means if you get a raise at work or something and it puts you in a higher tax bracket, that doesn't mean that everything is going to be taxed at that higher income, but that specific part of income that's a little bit higher is going to be taxed at that higher bracket. So to calculate your taxable income, that's going to be your gross income minus adjustments minus deductions. So like I did the standard deduction, which is what most people are going to get. You subtract that, and then adjustments is like I said, like contributing to your retirement account is a big one. So that would subtract from that too, and that would give you your taxable income. Another thing that's important is that we also pay state tax, and that one is a flat tax. So if you make more money, that doesn't mean you're going to pay like a higher percentage. It's just 4.55 for everyone across the board. And that's all on your taxable income. So if you make under the standard deduction, you're not going to owe any state tax either. One thing that is kind of important to understand is how self-employment tax works. So I know Lauren went a little bit over she went a little bit over FICA taxes earlier. So it's like extra taxes taken out for like Social Security, Medicare, stuff like that. Usually how that works is that you pay about 6% and then your employer pays the other 6%, right? However, if you're self-employed, you don't have that employer to pay that other 6%. So you have that 15% self-employment tax. It goes around to like 16%. It's not exactly 6 per 6, so it's not exactly like 12% that you're paying. It's about 6% that you're paying with you when you have an employer. So yeah, it rounds up to about 15%. And what's important to kind of know about this is that even if you make under the standard deduction, you will still have to pay self-employment tax. Because if we really think about it, the FICA taxes are taxes that you can't really get back unless you're an international student. So even if you're making under the standard deduction, you're still going to pay FICA taxes. So it's similar for self-employment. Even if you're under the standard deduction, you still have to pay that additional self-employment tax. So this is something that's pretty relevant if like you're choosing between like working, you know, a standard like minimum wage job versus doing Uber. If you do Uber or any other type of gig work, you're gonna have to pay that extra 15% self-employment tax. Whereas if you worked at a regular W-2 wage job, you won't have to pay as much in taxes. So that's just something I feel like is important for people to know. Okay, and then we have to talk about withholdings. So withholdings are how you prepay taxes. So like how when we're saving up for a big expense, we'll budget it out. So we're saving aside a little bit each month until the expense comes. It's similar for that. So tiny amounts are taken out of your paycheck for FICA taxes, but also to prepay your income tax. So when you look at your paycheck, you're probably going to see like federal tax, FICA tax, whatever. So the whatever is in your federal tax section, that's going to be withheld to pay for kind of your income tax. So usually at the end of the year, if you're getting a refund, usually, not always, but usually that means that you overpaid how much you overpaid your taxes and your withholdings and you're getting some of that back. So that's kind of what we'd want to happen. Ideally, it would be zero. So you would have all your money in your bank. You prepaid the perfect amount. But if anything, we'd prefer that you get a refund. So the amount that they withhold from your W-2, they kind of just depends on like what system your employer is using. Here at the University of Utah, how they do it is that they'll take your weekly earnings and they'll multiply that by, I think it's like 52 for the whole year. And then based on how much you would have earned by the end of the year, based on that one paycheck, they'll withhold. So sometimes that's not enough, sometimes it's too much. So you can adjust how much they're withholding by using another form called a W-4. So with this one, you just fill it out and you tell them like, oh, I'm single, I'm married, I have children. Sometimes they ask like, do you have another job? Stuff like that. So you can fill that out and then they'll use their calculations to kind of determine how much you should have being withheld. But also, if you're like, I know I'm gonna owe this much by the end of the semester, which as I showed you earlier, it can be kind of, if your tax situation is not that complicated, it can be pretty easy to determine how much you'd owe. So if you know how much you're gonna owe and you're like, no, I want them to take out, 20 bucks until the end of the year because that will perfectly pay off what I need, then you can actually go on your W-2 and put in the amount that you want them to withhold every paycheck. For international students, it's a little bit different. You have to fill out Glacier if you want to set your withholdings. And for international students, we highly recommend filling out their Glacier just because most of their income is taxable income. So usually by the time tax day comes, it's an amount that's accumulated over the year that's a little bit higher than they would expect. So sometimes they have a big tax bill at the end of the year. So it's a little bit better to just, spread it out over the year. So it's not a huge burden. Okay, and we can go to the next one. Okay, so I think we'll pause a little bit at this slide, but here we're going to talk about how to calculate your tax liability and adjust your withholdings. So here we have a tool. You can check out this IRS calculator and then you just put in your information and, open up maybe a paycheck and then have the tool on another tab and then you can just fill in the information and it will show you how much you should be withholdings. You don't have to fill out your W-4 right now, but if you can like get that amount, that will be like perfect for when you have to go fill it out later. If you are an employee here at the University of Utah, you can actually just view your W-4 in CIS. You don't have to call HR or anything. But if you work outside of the University of Utah, I recommend going to a manager first and asking where you can fill out your W-4, or if you have like some type of like portal where you get your paychecks, usually it's in there. But yeah, I would say go to a manager first. If they don't know, then you'd probably have to go to HR or payroll. So yeah, I'll pause for a little bit and you guys can like scan the QR codes, go to the link, and then see how much you owe in taxes. So I'll give you like 2 or 1 minute.
And if you have any questions, feel free to put them in the chat or you can unmute and ask them.
All right, so I'm just gonna leave it at that. But yeah, you can always like this webinar is gonna be online, so you can always go back and like find the link. So it will be like available for you, but we're gonna move on now. Okay, let's see what's the next slide. Right. Okay, so the next slide is talking about like yeah, the VITA programs that we offer here at the University of Utah. I mean, well, they're all over the Salt Lake Valley, but basically VITA is a free tax prepared resource meant for people who make under 67,000 or less annually. So if you make above that, there's still resources for you to do your taxes for free, but this is the main one that we have on campus and see in the community. So we here at the Financial Wellness Center host our own VITA tax clinic. And it's open in the spring, so you can come in and we'll do your taxes for you. So you don't have to worry about memorizing all this. I would just say the most important thing for you to do now, and if you're going to take away anything from this presentation, is just to fill out your W-4. So yeah, the Financial Wellness Center has a tax clinic, but there's also one at Westminster. They have a pretty good tax clinic too. One thing that's very specific about their tax clinic is that if you ever get a letter from the IRS, they have like a tax advocacy clinic. So they have professionals there who will advocate for you in front of the IRS. So if you find yourself in a difficult situation, that's a good community resource that you can go to. Other than that, there are a lot of free tax software on the internet. Usually you can look them up on the IRS if you just go to IRS free tax software, and the IRS website itself has a list of certified free tax software you can use. Some are My Free Tax USA, TaxSlayer, and then the one that we see a lot of international students using is Sprint Tax. Sprint Tax isn't necessarily free. Usually how it works is that ISSS is going to give you a code so that you can get the free federal section, but you still have to pay for the state. So if you want it completely for free, just come into our clinic and we can fill it out for you. There are also VITA programs throughout the valley. So there's a lot of community partners that run their own VITA programs. I know like some banks have to run some because of some like charitable contribution requirement that banks have. But yeah, here's the locator. You can take like a picture, a screenshot of that, and that will show you like that link will take you to a website where you can like put in your zip code and it will show you the ones available around you. And then here we have another zip code of like, QR code of free tax resources. Okay, yeah, so that's the end of our presentation, but I hope you guys stay in touch. We have a lot more resources other than just taxes, but that is a big one. So I recommend like signing up for our newsletter so you know when that comes out. But we do offer one-on-one financial counseling. So in the instance of taxes, let's say, you know what, maybe you are a small business owner, a gig worker, and you want more like more in-depth planning for taxes, you can make an appointment with us and we'll help you kind of plan that out and figure out how to pay your quarterly taxes. But also for other things like learning how to invest, budget, understanding credit. And then too, if you're making like any big life decisions that involve like a lot of finances or even small decisions that involve your finances, you can meet with us and we can help you work through that. Another thing we offer is credit counseling. So we have credit.com come in and they'll look at your credit score and they'll just give you advice on like how to improve it, what's good, what's bad. And then there's other upcoming events like this one. So I recommend signing up for the newsletter, following us on Instagram, and you can see all of our future events on there. All right, yeah, and then sign in and you can get a free gift from Financial Wellness Center. Thank you.
Well, thank you so much, Jade and Lauren. That was really informative, and hopefully y'all found it helpful. And yes, like Jade said, feel free to book with us. And if today was your first event of this week, welcome. And we would love to see you back on Thursday for our last College Financial Plan Week webinar, and that one will be on all things credit, building and repairing credit, and then you'll get a free gift if you've attended at least 2 of our events. So thank you. Have a great rest of your day.